Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, April 1st, 2013. Well, currently a downtrend in place. Back here we saw a candle make a lower high and a lower low, and since that trading day we've had an inside day, an outside day, an inside day and another inside day. So a lot of very indecisive trading throughout the past week or so. For today's trading we see a spinning top type candle, a candle of indecision, and prior to that we saw a bearish, fairly large black body candle closing down below the 1600 level. Did suggest that there was potential for the market to trade to lower levels, but we have fairly strong support coming in down below the 1600 level, extending down to around this 1590 area roughly, and we also have the influence of the Ichimoku indicators offering themselves as support and resistance. So this zone of support from the 1600 extends down a further 10 points, so very, very solid support down below. This indecisive candle does suggest that there is potential for a change of trend to the upside. We're not seeing any strength from the sellers at the moment, but certainly not seeing any strength from the buyers. So what we'd like to see is the buyers come into this market to make us feel a bit more comfortable about a change of trend to the upside. And if we look at today's trading, the market actually failed to close above that 1600 level, so it's now also in a minor time frame acting as resistance, and the market traded with its high today to the Tenkan-sen, and that's holding as resistance as well. So a market that's really been bound by close by resistance but also close by support. In terms of candlesticks, a type of potential candlestick reversal pattern, it's a harami pattern, and that's where we have this downtrend in place. We have the body of today's candle, a fairly small body within the body of the previous candle. It does suggest potential for a change of trend, and if we do see bullish activity up above 1600 and above the Tenkan-sen that's trading roughly around the 1602, 1603 area, then there is potential for the market to change trend and test to higher levels. We have had rejection from around the 1610 level, and then we do have resistance at the swing high around 1617, but that coincides with the bottom of the cloud, and that will be very, very strong resistance to this market. Now, looking bigger picture to the downside, we have very, very solid support down below where the market's tested to recently, down below the Kijun-sen, extending down to 1577 in a large zone down to 1559, and then this very large highlighted area extending down to 1523. So very, very solid support below, but to the upside, solid resistance once we trade above the cloud, extending at the moment up to 1639. So very, very solid resistance in big picture terms as well. Now, in terms of the Fibonacci extension, and we're examining the relationship of this current first time frame downtrend that the market's into the previous time the market was trending down, and here for multiple occasions we've seen the market rejected from the 100% level or just above there. This certainly does suggest that this market is not destined for lower levels. It does suggest that there is very, very solid potential for the market to trade to higher levels, but we're just not seeing any strength from the buyers at the moment. And also in terms of the Fibonacci retracement, we've seen the market test to the 50% level to be rejected from there, to the 61.8% level to be rejected. Previous days trading to the 50% again, and today again to the 50% to be rejected from there, setting this market up for that change of trend. All we need to see is some buying coming in, and we could quickly see this market test higher levels. Now, in terms of Ichimoku, some mixed signals here. The overall long-term bias is to the downside, with the market trading down below the cloud. So the likelihood would be for the market to bounce and then sell off again. But the market is bullish in the medium-term time frame by trading above the Kijun-sen, has been for some time. Not a successful breakout up above, and a weak buy signal because the market was trading up down below the cloud when that buy signal occurred back here in mid-March. And we haven't really seen a lot of follow through, so suggesting that there was confirmation of that being a very, very weak signal. In terms of the Tenkan-sen, the market is trading below the Tenkan-sen now for the second consecutive day, suggesting that we have a bearish market in the short-term time frame, and we have seen now today the Tenkan-sen act as resistance to this market, so that will be an important short-term resistance level up around at 1603 level, just above the round number 1600. So mixed signals in all time frames. We do have potential for this Kijun-sen to turn flat and price action to be attracted back towards there once again. The current candle hasn't finished developing, but if we see a candle develop as it is at the moment, then potential for that to happen, but we can't preempt the market. But a market that's in a second time frame uptrend, and that's confirmed by trading above the Kijun-sen. Possibility of the market trading to higher levels, finding resistance around the cloud or within one of these zones, and then attempting to sell off again, but potentially finding solid support in a range extending from 1600 down to very much lower levels.